President Trump says that the trade war with China is officially over because China has signed a trade deal and China agrees. They said, quote, both sides have confirmed further details on this framework, and this good news got investors so excited that we saw the stock market break new record highs because investors are hoping that this new trade deal is going to help the economy boom and it's going to help the stock market boom even more. But let's dig a little bit deeper to understand what this new trade deal is, because we've seen a lot of changes. Before President Trump entered the White House, the United States did have tariffs on Chinese goods. It was at a baseline of 3%. China also had tariffs on United States goods. They had a baseline tariff of around 8%. And this is what President Trump said was unfair. China is taxing us more than we are taxing them. That was when President Trump entered the White House and raised tariffs on many countries, including China. And President Trump jacked up tariffs on China all the way to 145%. And China reciprocated, raising tariffs on United States goods up to 125%, which put business with China on hold. Because if you're a business and now you have to pay 145% more, you're gonna have to sell your products for a whole lot more. And this was painful for our economy because China is the third largest trading partner with the United States after Mexico, after Canada. Well, it looks like we finally have a deal with these tariffs. This is what Treasury Secretary Scott Bessent said. The new United States tariffs on Chinese imports will start at 30%, and China tariffs on United States imports will be around 10%, which means it's about 10 times higher than what it was pre-President Trump, because we were putting a 3% tariff on Chinese goods baseline before President Trump. Now it's around 30%, and the Chinese tariffs on the United States are slightly higher than what they were pre-Trump. And this is why investors are so excited, because they're hoping that we're going to see more trade deals, that this means more business is going to be coming into the United States, that businesses will feel more comfortable finally investing and spending money again to boost the economy, boost the job market, and boost the stock market. But we will ultimately see what happens. But the stock market is booming. However, Canada doesn't agree. President Trump has canceled trade negotiations with China. He said he's, quote, terminating all trade discussions with Canada effective immediately because Canada imposed something called the Digital Services Tax that would essentially be taxing technology from the United States. And President Trump does not like that. And he has said that he's going to be announcing new tariffs on Canada coming within the next 7 days. So let's see what ultimately happens with that. We have a deal with China, but the deal with Canada has fallen through. Chances are something's going to be renegotiated, but that's where we are right now. Now, I want to dig a little bit deeper into the report, saying that prices of things could be rising in the United States starting soon. But before I do that, I've been getting a lot of questions recently about how do you actually invest your money through this type of volatility when markets are breaking new record highs. There's concerns about the economy, and there's a few things I want you to understand because I get this question a lot. You can do it yourself. You can also work with a financial advisor. It's not bad to work with a financial advisor. For some people, it's going to make things a lot easier. For others of you, you're going to want to do it yourself. There's no one size fits all. Personal finance is personal, and you want to know what is your right strategy. But if you do want to work with a financial advisor, make sure you know what your goals are, because it's kind of like a doctor. You want to get multiple opinions, and you want to make sure that the doctor is doing something that's in alignment with what you want. So if you are going to be working with a financial advisor, there's nothing wrong with that, but make sure you know what your goals are and you're working with a good financial advisor. If you're going to be doing it yourself, you have to know your strategy and stick with your strategy, because when things go crazy, you want to make sure you know how you can make your way through all the craziness. Now, for those of you that are looking for a financial advisor, again, I've partnered with a company called Money Pickle. They are a sponsor for Minority Mindset. They're an advertiser for this video. They can help get you connected with a financial advisor who is licensed at no cost. You can get a complimentary call with a licensed financial advisor to discuss your goals, to discuss your wealth building strategy. If that's something you're interested in, to see if you qualify for a complimentary call through Money Pickle for a financial advisor, you can check out how you can do that down in the description below. Yes, Minority Mindset is a paid partner with Money Pickle, so if you use them, we will get compensated, but there's no additional cost to you. And with that, let's talk about why people are saying that we could be seeing the prices of things rise in the near future. And the reason why is because, this is from CNBC, more sticker prices are going to rise due to tariffs and inventory is heading down. Meaning, although tariffs have been in existence, we haven't seen the price hikes yet, and we're also seeing the inventory of goods around the country falling. And the reason why people are saying this is because we have some companies that are issuing warnings, like Nike. Nike just issued a warning saying that you'll be seeing higher prices soon because of tariffs. And the reason why Nike is saying this is because they've had this inventory of goods that they've been selling that wasn't impacted by tariffs. That's why even though there are tariffs today, you haven't seen a big run up in prices yet because they had that inventory. Well, after the tariffs came into place, we saw inventory go down and costs go up. And now that they're running through the original inventory, the new tariff impacted inventory is going to be sold soon. And that tariff impacted inventory is going to be sold at a higher price, while there's also going to be a lower supply of that inventory. And if tariffs continue, that's going to continue to keep the prices of things high. This is what Nike is saying. And that's why some people took real interest in the most recent inflation report that we got, which said that inflation came in slightly higher than expected, saying, hey, tariffs are there, but the real impacts of tariffs are yet to come, and you should be expecting higher inflation come Q3 2025. So we'll see what ultimately will happen, but it looks like the previous inventory of goods pre-tariffs are starting to be run out. More businesses are saying, hey, I expect the prices of things to start going up in the next few months. And we'll see if they actually stay high or not, because you have some economists saying if we do see the prices of things like, say, shoes go up because of these tariffs, it's going to be a transitory rise in inflation. And once the tariffs are negotiated and they go away, the prices of things will fall. Now, for anybody who has not been living under a rock, you know that anytime you hear transitory inflation, you kind of buckle up a little bit, because we saw what happened last time we heard transitory inflation. I don't know what's ultimately going to happen, but it seems like if tariffs are around for a while, they could cause the prices of things to go up, especially if businesses cannot absorb that cost. But the real interesting thing that you want to pay attention to here is how much are the prices of things actually going to go up? Because we have a lot of variances, and that's the part everybody's guessing. We don't know. Are they going to go up 5%, 8%, 20% in which things? And are people going to see their incomes rise during this time, or are we going to see the economy slow down? Because we're in a very interesting stage in our economy, where over the last 5 years, inflation has been around 24%, a little bit higher. Median incomes have gone up around 20%. Which means over the last 5 years, the average person's income didn't keep up with inflation. Nothing groundbreaking there. But the question now becomes, what's going to happen over the next 12 months, 24 months, or 36 months? Are we going to see incomes continue to grow? Or are we going to see the economy slow down more? Because we have one group of people that are saying tariffs are going to hurt the economy. We have another group of people that are saying tariffs are going to strengthen the economy, that we're going to have more jobs in the United States. We're going to have more manufacturing in the United States. Which one is it ultimately going to be? Well, only time will tell. Everybody has an opinion. Financial opinions are like armpits. Everybody's got a couple, and some stink more than others. What I want you to do is not try to guess what's going to happen. Everybody can do that. I want you to be able to profit no matter what's happening. And the way you do that is by understanding how do you build wealth in this economic system. Now, if you've been subscribed to this channel, you know that the way you build wealth is by investing your money. And the reason why I say that is because stocks love inflation. It's a weird thing to say, but it's reality, because if we take a look at 2020 to 2022, when we had that high period of inflation, stocks were loving it. And the reason why stocks were loving it is because when you spend more dollars at businesses, if you spend more money at Chipotle, you give more money to Walmart, you spend more at Amazon, who does that benefit? Yeah, I mean, it can benefit the employees who might get a raise, but what we've seen is that people's raises generally don't keep up with inflation. The real beneficiary are the people that are generating the profits. And who's getting the profits at Amazon or Chipotle? It's the owners. Who are the owners? It's the investors. This is why you have to understand the game. The way you win in this economic system is about being a long-term investor, period. And you have to be willing to withstand the craziness. Chances are we're gonna see craziness coming. I mean, the next wave of tariff announcements is supposed to be July 9th. I say supposed to be because very recently the White House said that maybe July 9th doesn't need to be a very rigid deadline. I don't know what's gonna happen, but originally the next announcement was gonna be July 9th. And we're gonna get more information about tariffs. And we know anytime we get new tariff announcements, it can move the stock market up or down. We just got the news about China. This helped the stock market break new record highs. If the deal went the other way, well, you bet the markets will probably be going down. I don't know what's gonna happen on July 9th. We could get good news, we can get bad news, but in any case, it creates opportunity. When markets went down in February on the announcement of tariffs, in March on the announcement of tariffs, in April on the announcement of tariffs, it created buying opportunity every single time if you knew what you were doing, if you had a strategy. Now, if you're sitting there panicking, you're selling stocks, you're the one that's selling stocks to somebody else who's buying them for a big discount. But this is where everybody says, what if we enter a recession? Well, we might enter a recession. We could see the stock market fall by 20, 30, 40, 50%, maybe 60%, depending on how bad it is. Then what? We know over the long term, markets go up. And so when you have this short-term mindset of what's gonna happen in the next 6 months or the next 3 years, yeah, it's very stressful to invest your money. But when you say, I want to invest for the next 10 years, the next 20 years, now it's not as stressful because what happens over the next few years doesn't really matter. We know that recessions are gonna happen. We know we're gonna see some really severe recessions. But if you have enough time, you can withstand those recessions and use those downturns as an opportunity to buy even more. And that's the way that I want you to think. I want you to be finding the opportunity as opposed to being the person that's just panicking. Now again, if you want some additional resources, my team at Briefs Media publishes a free daily report called Market Briefs, where we break down what's happening in the economy, housing, stocks, crypto, and global markets into a fun, witty, and easy to read newsletter. It's read by hundreds of thousands of investors every morning. And when you join Market Briefs, you'll also get my investing masterclass as a complimentary bonus, where I'll walk you through how you can get started as an investor and find hidden investment opportunities before anybody else. It's all completely free. So if you want to join Market Briefs, I have the link for you down in the description below. And for those of you, because I get this request a lot, who want more, you want more research on which stocks should you be considering investing in, where is money moving, we have a higher tier product called Briefs Pro, where our team of analysts are publishing a report breaking down where money is moving, where you can find opportunities. That's something you can check out as well if that's something you're interested in. If not, no big deal. Start with Market Briefs. It's completely free. And with that, I will see you on YouTube on Monday.